Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FOSUN International Limited Annual Report. FOSUN International Limited is a diversified conglomerate operating across various sectors globally. At its core, the company has 5 primary segments: health, happiness, insurance, asset management, and intelligent manufacturing. The health segment focuses on pharmaceuticals, health products, medical services, and research. This includes the development, manufacture, sale, and trading of health-related products, as well as provision of medical management services. In contrast, the happiness segment caters to tourism, leisure, fashion, lifestyle, and consumer industries through investments and operations. This encompasses a wide range of activities from travel and hospitality to retail and entertainment. The insurance segment is dedicated to operating and investing in insurance businesses, including life and non-life underwriting. The asset management segment handles asset management, market investments, and investments in other companies within the group. FOSUN International's intelligent manufacturing segment produces iron, steel, new materials, and ore while also engaging in intelligent manufacturing business operations and investments. Additionally, the company is involved in various other activities such as property development, retail, medical research, tourism, banking, financial services, digital solutions, jewelry sales, dairy product manufacture, wine and beverage trading, and capital investment management. Overall, FOSUN International Limited's diverse portfolio reflects its commitment to growth across multiple sectors. FOSUN International Limited maintains a market capitalization of $34 billion, broadly in line with the industry peer group. FOSUN International Limited trades at a lower price-to-book ratio of 0.31 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 75% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has declined over the past 5 years, but operating income remains positive. The equity weakness may stem from capital structure changes such as buybacks or dividends rather than operational deterioration. The company has consistently reduced its share count, reflecting a shareholder-friendly approach to capital allocation. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline can be identified through various key performance indicators. On the growth side, FOSUN Insurance Portugal saw a significant increase in revenue by 11.2% in 2025 compared to 2024. Similarly, sales of pharmaceutical products experienced a notable rise, with Sinopharm Group Co., Limited, witnessing a 10.3% increase, and Suzhou Fujian Xingyi LLP experiencing a 36.6% surge. On the other hand, revenue decline was observed in various areas. Sales of other products decreased by 87.1% to Sichuan Chuapai Sheed Group Co., Limited, while losses on onerous contracts and reversals of those losses also saw a significant decrease. Furthermore, the effect of movements in exchange rates had a negative impact on revenue. Other key points worth noting include the decline in contract liabilities and revenue recognized from contract liabilities. However, it is essential to consider that these figures may not be exhaustive, as they are based on a summary of the provided text. Nonetheless, they provide valuable insights into the primary drivers of revenue growth or decline for the company. Net income for various companies has experienced fluctuations. Lanvin Group Holdings Limited saw a 70.1% increase, while FOSUN United Health Insurance and Pramerica FOSUN Life Insurance reported significant increases of 50.1% and 492%, respectively. However, some companies face declines in net income due to impairment provisions for commercial real estate projects and goodwill from Yuyuan. Profit margins have also undergone changes. For instance, Chinese letter, 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 saw an improvement to 99.8%, while Fidelidade Companhia de Seguros S.A. maintained a stable margin of 85%. On the other hand, Chinese letter, 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 experienced a decline to 17.8%. The changes in net income and profit margins can be attributed to various factors such as market conditions, competition, and management's expectations for market development. The significant year-on-year increases in net income have implied an increase in profit margins for some companies. However, the decrease in net income and equity per share attributable to owners of the parent has suggested a decline in profit margins for others. The company's financial performance indicates a consistent generation of positive operating cash flow. On multiple occasions, the net cash flow generated from operating activities is reported to be substantial, with figures ranging from RMB 5,213 million to RMB 26,586.5 million. These amounts suggest that the company is able to generate sufficient cash from its core operations to meet its financial obligations and invest in growth initiatives. Furthermore, several pages confirm positive operating cash flow for specific years, including 2024 and 2025. For instance, page 257 reports a positive operating cash flow of RMB 5,213,227 for 2025, while page 262 indicates a net cash inflow from operating activities of RMB 6,989,143. The presence of significant cash and bank balances, as mentioned on page 295, also supports the notion that the company is generating positive operating cash flow. Overall, the evidence suggests that the company's financial performance is strong, with a consistent ability to generate cash from its core operations. The company's debt level has undergone significant changes over the years. The total debt has increased substantially, with a notable increase in 2025 compared to previous years. This rise can be attributed to new debt financing instruments, such as RMB 1,173,646,000 worth of additional borrowing. However, there are instances where the debt level has decreased due to endorsement of notes receivable. The interest-bearing bank and other borrowings have also seen a significant increase in 2025, with a notable spike compared to 2024. This indicates that the company is taking on more debt to finance its operations or investments. The financial liabilities for unit-linked contracts have increased significantly in 2025 as well. Despite these increases, there are instances where interest expenses have decreased. For example, interest expenses dropped by RMB 10,724,574 from one year to another. However, the overall trend suggests that the company's debt level and interest expenses have increased significantly over time. The debt-to-equity ratio has also risen from 52% to 57%, indicating a higher proportion of debt in the company's capital structure. A sensitivity analysis shows that a 75 basis point increase in interest rates would lead to a decrease in profit before tax, highlighting the company's vulnerability to rising interest rates. The performance of various segments and regions within a company has been analyzed. On the positive side, the pharmaceutical sector, including FOSUN Pharma and Henlius, showed strong results. The insurance industry also performed well, contributing significantly to the company's revenue. Overseas revenue accounted for 54.7% of total operating revenue, indicating a substantial presence in international markets. The health segment experienced a modest growth of 3.1%, while the wealth segment saw an increase of 1.4%. Additionally, the intelligent manufacturing segment demonstrated impressive performance. Furthermore, the innovative drugs segment recorded a notable year-on-year increase of 15.98% in R&D expenditure. On the other hand, certain segments and regions struggled. The real estate industry faced significant challenges and pressures. The happiness segment suffered a decline of 15.6%. The asset management segment experienced a substantial loss of 30.1%. Moreover, the health segment incurred a loss before tax of RMB 11,657,456, while the wealth segment reported a loss for the year of RMB 4,872,327. Management's outlook and strategy. The the management of the company emphasizes steady growth in core businesses, innovation, and transitioning from scale expansion to quality enhancement. They aim to deepen global operations, expand product presence, and focus on core therapeutic areas while strengthening technology platforms and integrating AI into daily operations. To drive growth, the company will invest in research and development (R&D) of pharmaceutical products to produce more proprietary products with higher gross profit margins. The management has a prudent approach in investment and operation, minimizing risks through scientific decision-making. The company's strategy is focused on striking a balance between return, risk, and long-term strategic objectives. It adheres to the concept of profound industry operations plus industrial investment and aims to make investments in key sectors such as health, happiness, wealth, and intelligent manufacturing across multiple countries and regions worldwide. Management has also taken steps to manage its interest cost using a mix of fixed and variable rate debts to mitigate interest rate risk. Overall, the company's outlook is positive due to short-term maturities of financial instruments, indicating a strong control over the company's strategy. The company's financial activities in 2025 were marked by significant acquisitions and divestitures. In terms of acquisitions, the company entered into 7 license-out deals with FOSUN Pharma, granting licenses to commercialize biosimilars in various regions including the US, Europe, Korea, and China. Additionally, the company acquired additional interests in its subsidiaries and completed certain business combinations during the year. The company also made several divestitures, resulting in a loss of RMB 4.9 billion due to asset impairment on certain projects. Some subsidiaries were no longer included in the consolidated financial statements, and the company completed divestments exceeding RMB 17 billion equivalent in 2025. Furthermore, the company derecognized notes worth RMB 0.17 billion, factored notes worth RMB 24 million, and discounted notes worth RMB 117 million and RMB 824 million in 2024 and 2025 respectively. Overall, the company's financial activities in 2025 were characterized by both significant acquisitions and divestitures, reflecting its efforts to restructure and optimize its business operations. The company has a history of rewarding its shareholders through various means. One such way is by paying dividends, which the company has done consistently over the years. The records show that the company has paid dividends on multiple occasions, as mentioned in several pages of the extracted summaries. In addition to paying dividends, the company has also taken steps to return value to its shareholders through share buybacks. This strategic move allows the company to repurchase its own shares, thereby reducing the number of outstanding shares and potentially increasing earnings per share for existing investors. Concerns about inventory buildup or supply chain disruption exist in the industry. There are indications of potential issues within the industry related to inventory buildup or supply chain disruption. On page 19, companies Gland Pharma and Sisram have expressed concerns regarding these matters. Similarly, on page 178, ST Hubert SAS and Sichuan Chuapai Sheed Group Co., Ltd. have also raised similar concerns. The data from page 202 further supports the notion that inventory management is a pressing issue. The raw materials inventory has increased by 1.2%, while finished goods inventory decreased by 9%. Moreover, provision for inventories has seen a significant increase of 55.5%. These statistics suggest that companies are struggling to manage their inventory effectively, which could lead to supply chain disruptions in the future. Overall, these findings highlight the need for companies to reassess their inventory management strategies and address potential issues before they escalate into more severe problems. That concludes the financial summary for FOSUN International Limited. Feel free to comment below, and I will be happy to answer them when possible.